Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Another thing to notice is that my Greeks, now I haven't talked much about the Greeks and the Greek profile of these trades, and I won't have time to really dig into that. But what you'll notice here is that as of today, this would be like 276 EUI deltas trade. And if you look at the gamma and theta, you basically see that it is almost nil. I mean, in comparison with the delta, it's practically zero. So you're getting to put on this very limited risk trade that's limited on both sides, and you have almost no exposure to volatility and almost no exposure to the curvature of this option at this point. So that's one of the reasons I thought this would be a good example. So the second example that I wanted to show you, let's zero out this vertical, is a double diagonal. Okay, so let me click that on, and here it comes up right now. So the double diagonal is a kind of trade that the reason I like it is, first of all, it's a delta neutral trade. We can set it up so that I don't have to express my opinion about the volatility. Sorry, about the market direction at this point in time. And you can see in the delta column, this is 12 delta of EUIs. And it's basically, you know, you're doing this thing 20 times. This is basically a delta neutral trade. So if I put this on, the interesting thing about this is that let's fast forward the date a little bit. So to like second week of September, you can see how this thing is starting to evolve. Right. I mean, it's got about this particular trade's got about 65% probability of making money. It is hugely gamma negative. So the theta here decays in your favor. And what we need to check here is what are the effects of volatility. Now, in general, when and in the equity indices, if I model stock price increases, I have to also model the corresponding decreases in volatility. But here we know that it doesn't necessarily work that way. So what I want to do, I want to check what happens if volatility rises by 2 points and what happens if volatility falls. So like increase in volatility because of the nature of this trade is actually making this a lot more attractive. So you notice like Vega of this trade is 172. So 2 points increase in volatility should give us like additional $300 to the P&L. But of course, I also want to know what happens if there is some volatility contraction. And if that happens, so long as the stock doesn't move too far, you know, I end up not losing a whole lot of money. So this is kind of, you know, one of the reasons that I like this type of trade. Okay. Let me switch back to this. Okay, so in summary, you know, the very first things, you know, FX in general is a great vehicle because of the way the correlation structure works, in that in fact it's not correlated to a lot of the other assets. This is one of the reasons I like to trade in, and I think it makes sense to have some exposure there. There's also going to be more activity in the listed FX options. You saw the giant over-the-counter volume of foreign exchange volatility that's going on right now, financial reform and a lot of the regulations forcing things to be listed on exchanges, I think you will see a lot more activity in the listed markets for the FX. And finally, and really the point of this discussion was that, don't take what you've learned about equity options and just blindly apply it to the FX world. They have sort of different structure and different relationship. The premium seller doesn't seem to work. I like things like debit spreads and diagonals, especially the double diagonals. Keep in mind that changes in implied volatility are not inversely related as they are in SPX. And what as an example of the impact of that, think about selling tons of calls like in SPX or something like that, and you want market to fall, it's going against you. Market starts to rally, you're going to lose quite a bit on the delta, but the implied volatility crush is going to cushion the blow. So you are actually hedged there because of this relationship. Not so in FX options, right? You don't get that. So you have to be careful. And last but not least, something we didn't touch on, FX is actually a great vehicle for algorithmic trading. And one of the reasons is because it's a continuous market. It's 24/7. It's also a lot more normally distributed than the equity markets. There's not as many gaps or things of that nature. And a lot of my friends that trade FX actually trade it algorithmically. If anyone is interested in that topic, feel free to email me, and I can point you to some resources there. So with that, I think I wanted to tell you about or have you look at some things, what's upcoming for the FX options education. These are the most the webinars that will be happening over the next few weeks. I think you get all this information if you go to fxoptions.com. And that's all I have. Elanit, do you want to say anything in closing?
Hi, sorry about that. I just wanted to thank you, Eric, on behalf of everyone who was able to join us this afternoon. And don't forget that today's webinar is available in our archives. So just look for the email, but it's just www.fxoptions.com/events. And I'm going to send that over. And also, if you have any questions at all, either related to the webinar today or any other questions related to FX options, feel free to send them to ask@fxoptions.com. And also, if you have any questions to Eric, and just wanted to make sure that next week you tuned in for next week's webinar, which is with Brian Overby, Senior Options Analyst for TradeKing, who's going to be talking about improving your FX options trading using Options Greek. So once again, thanks so much, Eric. This was a very, very interesting topic, and I think we had a lot of good feedback. So just look for the recording, everyone, and we're looking forward to seeing you next week.
Great. Thanks a lot, everybody.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.